a royalty of 3.5% of the revenue, passenger vehicle revenue to HMC, and in lieu of this royalty, of course, we get all the cutting-edge technology, electric vehicles, future technologies as well, the use of brand. Post IPO, we believe that this royalty payment will remain the same. It is not going to increase, and so that is one. The second is, of course, the Namyang R&D Center. It coordinates with the local R&D center. Like, for example, we have our HMIE in Hyderabad, the R&D center. You would have already seen that we have already announced that we are going to improve the capabilities of India in terms of R&D. So I think that is a very critical part of the way going forward for us. Thank you.
गर्ग सर, एंटी प्रॉफिट हिंदी से लिस्टिंग के लेवल्स पे आपकी क्या प्रतिक्रिया है, इनिशियल रिएक्शंस क्या हैं, अगर आप थोड़ी बात कर पाए तो।
देखिए, बिल्कुल एज मैनेजमेंट हमारा हमेशा से ये उद्देश्य रहेगा कि हम अपना बेस्ट करते रहें, ग्रोथ, कंपनी को ग्रोथ के पाथ पे ले आते रहें, इनोवेशन करते रहें, नए प्रोडक्ट्स मार्केट में उतारते रहें, इलेक्ट्रिफिकेशन करें, जिससे लॉन्ग टर्म शेयर होल्डर वैल्यू रहे। ऑफ कोर्स प्राइस हमेशा इन्वेस्टर डिसाइड करेंगे, और एज मैनेजमेंट हम हमेशा कमिटेड रहेंगे कि लॉन्ग टर्म इन्वेस्टर वैल्यू क्रिएशन के लिए। धन्यवाद।
थैंक यू
सर। नमस्कार, मैं सौरभ पांडे, जी बिजनेस से। सबसे पहले आपको ढेरों शुभकामनाएं आपकी कंपनी की लिस्टिंग पर। हम आपसे समझना चाहेंगे कि जिस प्रकार का सब्सक्रिप्शन आपके आईपीओ को मिला, किस तरह से आप इसे देखते हैं, क्या उम्मीद के मुताबिक रही, और आगे बढ़ते हुए जो है कंपनी की रोड मैप क्या होगी, और शेयर होल्डर्स के लिए आप क्या लेके आने वाले दिनों में?
तो देखिए, ये जैसे आपने सुना होगा कि ये एक भारत के इतिहास का सबसे बड़ा आईपीओ था। तो ये एक हमें बहुत ही खुशी है कि जिस तरह से हमें सहयोग मिला है सॉवरन फंड्स का, FIIs का, और सबसे ज़्यादा इम्पोर्टेंट जो हमारे भारतीय बाजार के जो निवेशक हैं, जो हमारे लोकल इन्वेस्टर्स हैं, उनका जिस तरह से, चाहे वो म्यूचुअल फंड हैं, टॉप 9 से 10 म्यूचुअल फंड देखिए आप, किस तरह से उन्होंने सहयोग दिया है, इंश्योरेंस कंपनीज हैं, हर तरह से हमें बहुत ज़्यादा सहयोग मिला है। रिटेल इन्वेस्टर्स, ऑलमोस्ट 1.48 मिलियन रिटेल इन्वेस्टर्स ने पार्टिसिपेट किया है इस आईपीओ के साइज में। तो हमें बड़ी खुशी है कि जिस तरह का हमें रिस्पांस मिला है इस आईपीओ से, और वो हमें इस उत्साहित करता है कि हमें मेहनत करनी है और हमें और कंपनी को आगे ले जाना है, ताकि जो ये शेयर होल्डर्स का हमें जो भरोसा मिला है उस पर हम खरे उतर सकें और हम कंटिन्यूअसली कंपनी को ग्रोथ दे सकें, नई इनोवेशन कर सकें। ऑफ कोर्स, जैसे हमने बताया कि लगभग 32,000 करोड़ का इन्वेस्टमेंट जो है वो ऑलरेडी प्लान्ड है, लाइंड अप है। पुणे में 6,000 करोड़ का प्लांट जो है तालेगांव में आने वाला है, जो कि अगले साल सेकेंड हाफ में स्टार्ट हो जाएगा। तो उससे हमें और स्फूर्ति मिलेगी। तो हमारे बहुत ही स्ट्रांग प्लान्स हैं भारत के लिए, और हमारा मानना है कि ये आईपीओ एक बहुत बड़ा कदम है हमारी कंपनी को और ज्यादा भारतीय बनाने के लिए, और बेसिकली सबसे भरोसेमंद भारत का ब्रांड बनाने के लिए। धन्यवाद।
Well, that was the Hyundai management detailing, the way they see things for the time being. The way the street sees it is that they don't like this IPO. Maybe, in fact, it was too expensive for the street's liking. It was entire OFS, so massive supply out there. And also 2 points, getting into the IPO, they paid a big dividend to the parent. 15,000 crores went back to the parent. And they increased the royalty rate to around 3.5%. I think that's something as well. That's hard sentiment. For the time being, the stock at the low point of the day. The markets as well is a little bit lower as we speak. But I think it's a good time, Mangalam, to get to our first management. Gravita India. All right, we'll just
get Gravita India in the meanwhile. One would have thought that with the kind of valuation that Hyundai is demanding, there may be, some rub-off on all the other auto players as well. That hasn't been the case. No. In fact, there has been some normalization, and we've seen some moderation in demand come by as well for a lot of these auto players. So that's something we'll definitely watch out for. The third quarter, extremely crucial for gauging the consumer health of the country, because the first couple of quarters, you can say that there was disruption related to elections, etc. The second quarter, there were rains, etc. Now the monsoons have been normal. Election and all those things have been done with. Now the proof of this pudding will definitely lie in the eating. The festive season comes by, that will really be the true test of how the health of consumption is. As of now, we are seeing a bit of a decline, but as promised, I think we have the management of Gravita with us.
Well, that's right. Gravita India, that's the first management on our show. They reported a mixed set of numbers because margins came in healthy, but the volume growth was a little bit lower than what Kotak was estimating. Also, if you see the overseas business as a percentage of the total contribution, it's come down to around 30%. We have with us Mr. Yogesh Malhotra, the CEO of Gravita India, who joins us on the show. Hi Yogesh, good morning and good to see you, Ben. Well, let's get a couple of basic numbers out of the way because the stock, after seeing a big run, has come in for profit taking. Now it's down close to 7%. Volume growth for the past quarter on the lead business was close to around 8%. And if I take the summation of lead, aluminium as well as plastic, it was in that vicinity of around 7 to 8%. For the first half of the year, I think it is close to 20%. For the year, what kind of a volume growth are you looking at? If you could help us out with that. What is the VAP contribution and the overseas business? 3 numbers is what I'm asking you for.
So on a quarter-to-quarter basis, there could be some changes, but we give a rolling 4-year guidance. And for the next 4 years, that is till FY28, the guidance is 25% growth in volume terms, CAGR. And that remains intact. And this is at the back of some favorable policy changes like extended producers responsibility, battery waste management rules, reverse charge mechanism that has come up only recently, which makes higher availability of raw material for the organized sectors.
So you're saying even for this year, Yogesh, just to clear the point, even for this year, you'll do 25%?
So quarter on quarter, there may be some changes, and year on year, there will be only some small changes. But yes, it will be in the same vicinity of 25%.
Should we work with 20 to 25% to be safer, or do you think that 25%?
Yeah, so 22, 23% to 27, 28%. So it will be in the same range only.
22 to 27% will hold you at this number. The overseas business as a percentage has come down to around 30%. Is there a slowdown in the overseas business? If you could give us a sense on that front, where do you see this number stabilizing at? And also VAP as a percentage of the mix, I think it's holding at northwards of close to around 40%. Where does that stabilize? Overseas business and VAP.
So around 45% of the total revenue is coming from VAP currently, and we want to take it to around 50%. So that also remains intact. In fact, the new target is to increase it beyond 50% also. And as far as the mix of domestic versus overseas is concerned, it will keep on changing from time to time, depending on where capacities are coming up.
Right.
So on a healthy rate, it's around 35% from overseas and 65% from domestic.
All right. Okay, we take that point. Just on VAP and export contribution itself, how does all of that tie into your EBITDA per unit? Because I'm looking at lead, closer to 21.5 per kg. You have aluminum, which is 17.5 per kg. Where does this number settle at? And what does this mean for your margin lines?
So on a sustainable basis, the lead EBITDA numbers are around 18 to 19 rupees per kg, aluminum around 14 to 15, and plastic around 10 to 11 rupees per kg. But these will keep on shifting. We've earlier also mentioned that because of our global presence, we take advantages of where the prices are higher and then take advantages of that in terms of bottom line numbers. And if you see in the current quarter also, something similar has happened. So we have diverted some of the material into India where we get better margins. So that is also why the domestic sales have gone up. But on a sustainable basis, these are the numbers. And also there is going to be some pressure from the raw material point of view. But we expect some economies of scale, some operational efficiencies. And as I mentioned earlier, that, sorry, yeah, please.
Yeah, no. What we're trying to get at is that with all of this, where do we see your margins? Because they're about 10.7% in the second quarter. With the mix that you're changing, with the offsetting of economies of scale from the cost pressures that you have, where do margins stabilize, and what is the trajectory from here on?
So the margins in terms of EBITDA per ton of different verticals would remain almost the same. There would be some slight increase of say around 0.5% in each of the verticals. But as the mix will change and the new verticals are more profitable, like plastic and rubber are more profitable, in percentage terms, you may see some increase going forward.
How much could that increase be?
Around 1 to 2% overall in the next 3 to 4 years. And it's not an immediate change, but in the next 3 to 4 years, you will see some changes.
All right, but plastic as of now is doing 10 rupees per ton, right?
Yes. Yes. So plastic is at a very basic stage. This is just seeing the shift that is taking place because of extended producers responsibility, where we are developing new products to meet the market demand. And it may take some time, but eventually it will give you higher returns. But it's 10 rupees per kg on an absolute number. In a percentage number, this is much higher than lead, which is around 8% to 9%. In plastic, it is around 12%.
Got it. And your ROS will be maintained in the mid-20s?
Absolutely. It would be upwards of 25%.
All right. Another factor that I'm observing in the first half of the year is your working capital days. That's improved to around 86 days. Where does this number settle down? Because I recall when it used to be more than 100 days, it's come down to 85, 86. For the year, what should it look like?
So absolutely, because now this domestic shift is taking place where we are also going into more tolling arrangements. So the overall inventory days are going to come down. Again, in the next 3 years, we want to bring it down to around 65 to 70 days. And that will increase. I mean, that will come down to that level in a linear manner going forward. So this will create some free cash flows for us. I mean, if you look at the last quarter, also we've generated free cash flows of around 35 to 40 crores. So it will continue to come.
All right. Very quickly, the finance minister has allowed RCB on metal scrap. That's a positive for the industry, right? If you could just sum up in 30 seconds, how does this help you?
So absolutely. I mean, there are generally two economies running parallelly in India. One is the economy that is paying taxes, the other one that is evading GST, etc. So with this mechanism in place, I think that evasion of GST that is taking place will come down. It's a very it's a very good for the organized sector, and this will ensure that the raw material availability for this organized recycling industry increases. And even if you look at the last quarter, we have, doubled our overall domestic procurement in India. So we see this going forward also, the same trend will follow.
We appreciate you joining in, Yogesh. The stock has been a big outperformer in the last 1 year. Last two sessions, it's given up close to 10%. But the key numbers that you're giving us is margins will hover around current levels. You're guiding for volume growth of 22 to 27%. And ROS will be northward of close to around 20 to 25%. Well, on that note, though, we'll slip into a short break. On the other side, we have another management waiting for us. That of Rajratan Wires, Mr. Chodia, is waiting for us. Stay with us.
Welcome back. Earnings flowing in thick and fast. You have Paytm's second quarter results where the company has reported a profit on the bottom line as against a loss, but that has a one-time impact, and as a result of which, despite the profitability number, the stock is at the low point of trade. The revenues have declined by about 34%, and there has been a one-time gain on sale of movie ticketing business to Zomato. Remember that deal which had happened, on account of which there has been a one-time gain which has reflected in the bottom line. Because it's a one-time gain, the net profit has been ignored by the street, and the current stock price is telling you that there has been weakness, at least on the top line front, which is a 34% decline too. But let's talk about Rajratan Global Wire. The company reported a mixed set of numbers. There was minor improvement in the top line. However, margins are still below that 16% mark as well. We have Mr. Sunil Chodia, who's the chairman and managing director of the company, joining us to discuss the quarter gone by in more detail. Thanks a lot, Mr. Chodia, for joining in. Always a pleasure speaking with you. You haven't yet uploaded the presentation volume details to the exchanges. So for the benefit of our viewers, if you could tell us what the volumes have been in the second quarter, the first half, and where does your guidance stand at when it comes to this year? Because earlier you had said you're targeting close to 1.25 lakh tons for the entire year.
Yeah. So Mangalam, this quarter we have done 26,500, close to that volume. And our first half volume stands at 53,000 tons. And I think we'll be able to achieve a target of close to 120,000, which I have been telling. 20% growth in volume this year we are targeting, and we are making efforts to achieve that.
All right.
That's a decline from the 1.25 that you were targeting earlier, right?
Yeah, that is because of the geopolitical situation, the numbers in the global market where we are exporting our product are not so good. And also for last 2 months, we see some pressure on the automobile sector and pressure on the volume in the tire business also. Yeah.
All right. Hi, Mr. Chodia. Good morning and good to see you.
Hi, Nigel. Hi, Nigel.
So 1.2 lakh is what we'll hold you at. And in terms of a revenue number, since you're pulling back your guidance by approximately 2.5%, 1,050 revenue should be possible.
No, the prices have gone down lately. Oh. So, it will be close to 1,000 crores. This year we should be touching 1,000 tons. Yeah.
All right. What was impressive in your past? what was impressive in your past quarters numbers is at least the gross margins improved to around that 38% from around the 35.5%. So EBITDA margins continue to be in that vicinity of around 15.5%. Earlier,
on
you
a
had
consolidated
hinted,
basis, yes.
consolidated basis. Earlier, you had hinted that you would like margins to be in that vicinity, I think, of around 15 to 16%. So do you hold on to that guidance for the year, given demand, given the operating leverage? Should you be in that vicinity of 15 to 16%? I ask you this because first half of the year, it's 14.5%.
Yeah, so consolidated, we will still target 15 to 16%. And that is because there is a pressure in the margin in Thailand business. China is very aggressive in global market. So we are not able to achieve the targeted margin in Thailand business.
And despite that, you are confident of...
Despite that, you are 15, 16, yes.
15 to 16%. You know, on Thailand itself, you had said that you've changed your strategy. You're looking at market share more than margins. So how has that panned out? Because the margins have declined. Have we seen an increase in market share? Because last time, it was close to around 26%.
If you compare, Thailand, our volumes have grown 27% in the first half compared to the last year. So we are doing that, yes.
All right.
So what does that market share number stand at right now? Because last was 26%.
In Thailand, last quarter, our market share was little above 30%. In Thailand.
Little above 30%. So you are gaining market share.
What about India, sir? I recall when the stock was getting a premium, you provide to the tire makers. But at one point of time, Raj Ratan Vai was trading at a premium in comparison to even the tire makers. But that was because your market share was rock solid. This is on a stock market valuation perspective. Currently, what is the market share that you're holding? I think you had hinted at the start of this year it was 37%, if I'm not mistaken.
It's back to 42% in the last quarter. That is what data we collect. Yes, but we are in a competitive business. So our competitors have also increased capacities and there is a competition to gain market share.
So from a long-term standpoint, then what is your margin trajectory likely to be? Because it's competitive out there, for you to hold on to your market share, you'll have to give up some margins, right? So a sustainable basis over the next, say, few years, what are your margins likely to be? And Chennai plant, has it started producing finally?
It has started producing in last quarter. So that project will come up in phased manner. So first phase has started. And we have done around 1,000 tons of sales from Chennai in the current quarter, which is in the volume here. And going down the line, we will keep on increasing the sales from Chennai facility. The sustainable margins will come when we are able to sell major quantities in global market, for which we are making efforts. We have started a company in USA to market our products in USA. We are also have a representative office in in Europe. And there are some green shoots of approvals. And once we pick up the volume, and of course, this business takes time. Picking up volume will happen not in 1 month or 2 months. It will take 2 years, maybe 1 or 2 years. And that is when we think that we will be able to make a sustainable margin of 16, 17, 18. Yeah.
Okay, all right. You've got a strategy in place. Tough times are trying times for you, but you have battled it before. So we wish you all the best and we'll hold you to these numbers. 1.2 lakh tons, 1,000 crores of revenues, 15 to 16% of margins, and holding on to that market share of around 42%. Thanks a lot, Mr. Chaudhary, for joining in and filling us in with all of those details. Well, we'll slip into a short break, come back, and we'll focus on stocks and on market action as well.
Formidable recovery from the lows for our indices. When we started, the Nifty was down about 100 odd points, currently sitting with a cut of just 50 points. And the reason why the markets have recovered is because of the Nifty Bank, just below the red line right now, had briefly moved into the green as well, led higher by ICICI Bank. So what we'll do is take note of the way the markets have recovered and also point out to the volatility that we've seen over the last couple of days and take your leave on this edition of Chartbusters. Thank you so much for watching. Trading Hour comes up next.